So I guess we got a good amount of people in with us right now, so we could start, I guess, getting into our update. For everyone who does not know, my name is Max Chera with Express Capital Financing, and I'm here with Nicole Andrews from Fastapp Appraisals.
Hi,
Thank you,
everyone.
thank you so much for being here, Nicole. We definitely appreciate it.
Thanks
And
for having me.
for those of you who remember, we were here last time where we did our predictions for 2021 and kind of recapped where we were. A lot of surprises last time. There's definitely a lot of surprises this time as well. Some things we may have expected, some things we definitely did not expect. And we'll kind of touch base on a little of them, go into it. So, I mean, let's start off first, I guess, with where we thought we would have been last time, right? Let's just recap a little bit of what we thought going into 2021. Where were we? So coronavirus was at its mid stages, right? Everyone was like, "Oh, we're coming down." There's news of vaccinations. Now we have one, which is awesome. Um,
And it
and
was really pushing, like the vaccination. It looked like we were going to get vaccination in October. The election was on the forecast. I mean, that was looking like it was
that
going to
automatically delayed it a couple of months, right?
absolutely.
And
And
then
then obviously, my prediction of who was going to be president was blown out of the water. So I was predicting that Trump would stay our president, as history, usually typically repeats itself. So surprise, surprise, here we are. And the president is not Trump. And so, I mean, some of the things that you and I talked about were that I think that the interest rate was probably going to stay steady and maybe, even decrease more, which would be shocking. But with the supply and demand at where it was, I thought there was a lot of opportunity out there. Obviously, now Trump is not president. We are going to see the interest rate increase. And I think that that was probably predictable based on the supply and demand that we have right now. Obviously, with Biden being president, we can say for sure that that was, once we all knew that, we knew that, the interest rates were going to go up. Good news is that I don't really think that even with the interest rate going up, that we're going to see a slowing in the market for the next couple of years, my prediction. And
I would
obviously,
agree with that. I would actually really agree with that. And part of it is because, the what we're expecting to happen is not something that could or will happen overnight, right? We're talking about hundreds of thousands, if not millions, of people that are potentially in a foreclosure position, potentially in a position where they're underwater or may have to sell. Now they're probably not today, right? Because property increase so much, but they still may have balloon payments or whatnot coming up. And in all honesty, banks are they're not stupid, right? They don't want to throw out 100 foreclosures in one day or 1,000 foreclosures in a certain area where they're now hurting their own values, right? So if they want to keep the demand high and the supply low in a sense, or not increase it too fast, that's going to help keep prices along where they are for a little bit. Would you agree with that, or?
I think that the prices of housing is going to go up. And I think we've already seen that this year. Don't quote me. I want to say we saw a 20% increase since the election. So not really the first of the year, but since the election, I think we've seen a 20% increase. So
So, and,
supply is
and
a
you're saying all this before the end of the year, even. So you're talking just four
Oh,
months?
I think we're definitely going to see pricing increase during this next part of the year. The next
Right.
3 quarters, I definitely think we will. I think that the only thing that's going to offset that is, of course, if people buy land and we get a lot of building going, which was one of the things I think we saw in the 80s. And then we just had this, mass producing building going on with, anything that was built in the 80s, you can kind of tell once you walk in a property, it was pretty prefab, to be honest with you. And, contractors were going in and just really throwing places up. And the quality of construction was awful during that time frame. And I think you saw an quick overbuilding happen, and then the slow happened because of all of that building that went on. Although then you had a lot more land. So there's going to be some offset to that as well, because you don't have a huge supply of land. Although, I mean, come on, we still have plenty of land to be built on. So, but I
Yeah.
think that's what we'll see. I mean, if I was to tell anybody to do anything right now, I'd say go buy some land and start building,
Right.
because your rentals right now are at an all-time low as far as vacancy rate goes. So you still have a lot of people living with parents. We've seen a generation of folks in the 30-year, mark, that are still living at home, and definitely your 20-year-olds. And now those are the people that are looking, those millennials are looking to buy, and they're actually buying at a lot higher rate than I think we predicted 5 to 10 years ago. So they're willing to spend quite a bit more on a home. And maybe that is that way because it's kind of been an unprecedented time with the pandemic, people living at home. Again, they're living at home with their parents, they're in their 20s, and now all of a sudden they want, yeah. So, you're seeing a lot of different things that are kind of, in that perfect storm type thing happen that I think, a lot of us didn't predict 5 years ago would happen, because obviously nobody saw the pandemic coming. So, no, I definitely, to answer your question, I definitely think we're going to see an increase over this next year continue. I don't think it's going to be as great as it's been in this last, what I'll call quarter kind of. But I definitely think you'll see an increase continue this year. And I don't think we'll see anything slow down into next year. About this time frame, I think we may see slowing happen then.
Right.
But
Yeah, I agree. I would think the same. If not an increase, I wouldn't see us going down anytime soon or trending downwards. Like I said, and kind of what I was getting at before was, even once the foreclosures become allowed, you still can't foreclose overnight, right? So we're still going to have to wait
takes
for that
90,
process to happen.
120.
Exactly. Like, we're, and I say this all the time because it's true. We're still dealing in New York with foreclosures from '08 and '09, probably very, very few and far in between, but they still exist. Right.
Right.
So it's not going to just happen overnight, but there obviously will be, eventually there will be more properties hitting the market, whether they're bank owned or the markets just level themselves out, whether the interest rates have to just go back to where they were or moving in those directions. Question though, you mentioned ground up construction, and we're actually getting a very big influx of requests for ground up construction. Have you seen the same?
Smart people out there. Smart people out there. I mean, people are usually ahead of, you can read a lot of what's going on and kind of, decipher what's warranted and what's not. And obviously, construction is something that's needed right now. So, I mean, that supply and demand is not going to balance out, and you're going to have some supply out there unless we start building again. So that's definitely necessary at this point. What was your question, though? I apologize, Max.
No, I was just asking, like, if you were also seeing like an influx of requests, whether it be for after repair appraisals for ground up construction, or if you're just seeing that happen more, because like we're seeing it a lot in Florida, Texas, Atlanta, all the and again, it always comes back to this, the big suburban areas that have a city that you can still live in and feel like a part of the city.
Well, it's your trending. Your cities kind of set your trend. You've always seen that throughout history. And history repeats itself, because what do you have in those big cities? You have big colleges, you have, work, and that's where, the jobs are at. People have got to go where the jobs are at. People don't want to commute too far. So of course, in those, urban areas, you're going to see, things that you wouldn't typically see. I'm seeing, well, in the private money, I am definitely seeing an influx of construction type appraisals and things like that. Not as much on the conventional market yet, but obviously it's more because in the private money industry, I'm seeing big, huge projects. Like I just saw one in Sacramento for I think it was 30 some odd units, houses, in between 15 and 2,200 square feet, you know, all marked up and ready to go. And they were trying to fund on that. And what they were going to make and what the investment was, you know, such a I can speak today, that it was, you know, huge. I'm going, oh my gosh, you know, this is a great project to get involved in. But I mean, obviously, we'll see if they can make that out of it, right?
Right.
But construction definitely is where it's at right now. If you ask me, I would definitely say construction would be a good investment at this point. I still think that there's also, like we were kind of talking on our last one, about commercial, because you saw that, I want to say in the 70s, where you think of your old movies and stuff like that, where people moved into commercial space and made it living space. And I think like your urban areas, you could look to that still and maybe refurbish and redesign and do rentals, things like that, where multiple people are living in maybe one condo space, something like that. We saw that years and years ago, where that commercial space was turned into living space. So I think people should really be investigating that too. But I mean, housing is where it's at right now, period. Across the country, like marketability, housing is, that's where the money's at right now, obviously.
Right. So, I mean, when it comes to commercial, I really could only speak for New York, because really that's what I know here, right? So I know that we're hurting right now commercially. We're also probably the furthest along, that was allowed to do indoor dining and a lot of these other things that to be out there. So it's probably a big part of it. But just curious, like, have you seen values at all change on the commercial side, or are they pretty consistent?
I would say they're again increasing, and I thought they were going to decrease heavily, and I thought that's where some investment was going to happen, but that leveled off very quickly with talk of vaccine and things like that, right? Probably after you and I talked last. So, as far as housing is concerned, like I told you the last time we talked, I watched a place in New York, in Manhattan, go down 1 million. And I would gather to say now that it's probably back up that million, because as things took such a quick turn, with the vaccine and people's confidence level, which is the market, obviously. I mean, you're just seeing it happen so quickly. And the media is not even really keeping up with it, to be honest with you. But people's confidence is way back up, and that will change the market just like this. So I would gather to say that places like Manhattan, I still would say I don't think Manhattan will recover as quickly as, like you and I spoke before. I think it will be 5 years before Manhattan is Manhattan again, or what we know, of the last 10 years. But definitely your urban cities, those places, things like that. There's some problems out there, but I think it's going to recover a lot quicker than people predicted, just because of the confidence that you're kind of feeling from people already.
Right. Absolutely. I mean, when there's people out there, when people are buying things, just spending money, being active, that's what keeps our markets going around and around.
100%.
So speaking of Manhattan, actually, so that's an interesting one, right? So more actually for Brooklyn is an interesting market, because we've seen both. We've seen people leave Brooklyn to go to places like Jersey, Connecticut, Pennsylvania, and so on and so forth. And then we've also seen people leaving Manhattan coming to Brooklyn, because guess what? Brooklyn's considered spacious if you're from Manhattan.
Right. Absolutely.
Even though it's tiny, it's still considered spacious. So it's kind of stabilized itself in a very weird way, where we haven't really seen, unless you've seen something different, we've kind of seen things just stay straight throughout the entire process for us here.
No, absolutely. That's absolutely what I've seen as well. I mean, you saw people leave the city And you can look at any big city, as you and I spoke last time, you can kind of look at any big city, even like somewhere like Dallas, believe it or not. People kind of left the city and went to the outskirts. And those people that maybe lived right outside the cities moved further out to suburbia. And then, it kind of is a wave effect, and you saw people, I mean, obviously people in the big cities, they were, they used to work in their apartment. I mean, excuse me, work in their apartment, work in an office and live in their apartment. And because they were in a city, they could walk everywhere and do everything like that. And then when they went to working from their apartments, they found their apartments that were 500 square feet were not quite big enough to live, work, and stay in 24 hours a day. So you really had, people immediately feel stir crazy and want to get out of the city. And that's why there was a mass exodus of most of the big cities. And like you said, then people in, and when somebody in, say, Brooklyn could sell their property and get that much more for it, right? Mm-hmm. And they sell it to somebody who's coming from the city who thinks that's reasonable, even though it's Brooklyn and it's to maybe somebody from, I don't know, Long Island, although that analogy is probably not good, but White Plains probably, thinks something in Brooklyn is like crazy expensive. But, to somebody coming from Manhattan, very reasonable, right? Right. So you kind of saw that happen and it played out. It definitely played out. And you saw it really, I think because the pandemic hit earlier in New York, you really saw it play out there. And like you said, it hasn't quite recovered as quickly as some of the areas that maybe weren't as affected by the pandemic and, the disease and everything that happened to everybody. I think New York, that area felt it so much worse, and the surrounding areas, New Jersey, Connecticut, you really heard people talking about it and very stressed about it. And so a lot of moving pieces were happening during that time. And again, you guys haven't recovered quite as quickly. I don't think the confidence level's there.
Correct. Yeah, I would agree with that. I mean, I would say Manhattan, you're definitely seeing it get better. It's not what it was, right? And I think when we were speaking back then, I was talking about how it was a ghost town. You could drive by and there's parking everywhere, which is very uncommon for Manhattan. But now you go out there and things are kind of, it may not be what it was in 2018, but it's definitely getting back there. You'll see people that the outdoor dining, we're getting back to warmer weather, so that's okay. They opened up. We actually opened back up now for indoor dining. I think it's like 25 or 45% we're allowed. So you can see the businesses are starting to gain their confidence. So they're becoming more confident. They're spending more money. They're doing more advertising and different things just to keep the economy moving and floating. Have there been any other big factors this quarter that you feel have impacted our market, whether for the better or for the worse?
I mean, obviously, I think we've touched on most of them. It's been the change in president. I mean, definitely, we always say Q1 is like our downtime. And it really didn't last like it usually does. We're already kind of in a recovery. March has been busier than I've seen it be in the last couple of years. Last year was weird because in March it happened. But because of that, there was some stall period, but we had already seen it starting to recover. So usually you see that stall, but this quarter, March has definitely trended upwards. We're already seeing that recovery happen. No, nothing else big. I think, you're going to still see the increase of housing over this next year happen a little bit slower. I mean, we haven't even hit our spring market yet.
I was just going to ask you that. Do you think that the spring market's going to spring us even more
I do.
forward? You do.
I do.
You think that there'll be even more
absolutely. Forward? I mean, you're already seeing it. Like I said, you're already seeing that recovery started to happen in March already. Everything's starting to move again. And I think some of that, again, is the confidence of the buyers, because they're seeing all this positivity towards, the pandemic ending and things like that. You're seeing travel start to happen again. You're seeing signs of things happening. And I definitely think spring is going to bring on, a real demand for housing, because that's when people usually are really the most active, because in summer people like to travel and vacation, so they're not as active in the summer. So spring is usually the big time when we see everything really go up, and then it kind of levels off, and summer is kind of that leveling period, and then we have it again in fall. So I think you're going to see it. If you're ready to move on something, you better be ready to move on it, because there's a lot of demand out there and very little supply. So, which is going to increase.
Crazy right now.
Yeah.
I've been seeing left and right. Anyone who's active in the markets just can't stop talking. Like realtors, people I speak to every day, their whole conversation is, Max, what could I do to win this offer? How do I win this offer? I'm over asking already. What do we do? How do we win this? That's the conversations. And in the end of the day, it's either this or make their life easy. Honestly.
Well, cash. That's what I say is not necessarily overbidding, is saying all cash offer,
Right.
Ready to go. I've got everything, here. And
close quickly, no contingencies, we'll remove this, right? There, making it as attractive as you possibly can, really, is really what it is, really what it's up to. One other thing that I actually heard, I can't confirm this, I was looking for it online, but I've heard this from a reputable loan officer that I know that's in the FHA field, that mentioned that Fannie Mae is actually increasing the down payment from 5% for investment properties to 15%.
I haven't heard it confirmed yet, but I mean, that is typically what happens when you have a Democrat in office. So, I mean, with, your increase in rate, and then loan programs will change on the FHA and eventually conventional side. So do I suspect that? Absolutely. They're going to do things that are going to try to slow the market because they can. And honestly, come on. I mean, the interest rate, even though people are saying, oh, the interest rate's increasing, blah. I mean, come on, people. It's still lower than it's been in, a decade? I mean, it's really not anything to be up in arms about. And so, yeah, I mean, the loan programs, everything's going to get stricter. And, that'll probably help on the recovery side a little bit. But, who knows? But, I mean, I suspect that will happen. I haven't heard any rumor yet, though.
I saw from a reputable person. Like I said, I can't confirm it. I was looking it up a little bit myself just to kind of like see it for myself. So I heard it was supposed to start April 1st, but I'm gonna keep looking for that so I can.
I'll research it too if we get a firm answer. I have a friend who works in Fannie, so I can ask if they're hearing rumor there. If they are hearing rumor there, then it'll probably come true. And if we do, I think you can put it up on your webinar, can't you?
We'll put it in the email when we send it out for everyone to say thank you for attending. So this way everyone knows. Really quickly, also, by the way, we want this to be interactive. So anyone who has questions, you're unsure of something, you want to know what's happening in a certain market, or you have questions about it, please put it in the chat box, use a question and answer. Or if you're brave, raise your hand. We'll call on you. We'll let you speak. But before we—
You're brave.
You're brave. Most people don't like to be on the spotlight.
Not you and I. No problem there.
Not at all.
Confidence levels high.
What was I about to ask you? So we were talking about the leverages, right? And now, so I was the rates. For those of you who are very analytical, like to understand things really quickly, besides for the demand, I want to explain to you guys why it makes sense that people are overbidding, or maybe you don't want to call it overbidding, but they're willing to spend more on a property than they would have last year. 1% in your interest rate generally equals about 8 to 10% of purchasing power. So which means that if interest rates go up by 1%, I can afford 10% less of the property value that I would have been qualified for beforehand. right? So now all of a sudden we walk into COVID, and the first response of the government, which was pretty smart, right? Like, hey, let's lower interest rates. Let's keep things moving, right? And usually the first response to that, the easiest response is let's make it cheaper. Let's make it more cost effective. And I would say like that kind of is why it makes sense to me.
So let me touch on that.
Mm-hmm.
I think you have something going on. I see you looking at the question, but let me touch on that appraisal wise, okay?
Okay.
So just so everyone is clear that just because you as the buyer decide, you know where I'm going already, right, Max?
Exactly.
You as the buyer decide that you want to pay $10,000 more because you just love this house and you just have to have it. Please keep in mind that the comparables out there may not be catching up with the market. And so as you have a supply and demand issue and an increasing market, do remember that, you're going to have the cash to come in, or more than likely. I mean, it's up to your loan officer. I'm not the loan side, but I'm just saying on the appraisal side, please keep in mind that your appraisal probably isn't going to appraise for what the current market is if you're going to overbid. And that's always something everybody needs to keep in mind. I think that's very difficult for them to, remember that the appraisal is based on the comparables, not the listings, but closed comparables. So not on the listing market that's out there.
Like I've been telling people pretty similar, as I say, you have to do two underwritings nowadays. You have to underwrite for yourself as far as profitability, and you have to underwrite it based off of what it's going to look like on paper, meaning appraisals, right? So we know certain markets will get a certain price for it. Even if I list it at 600, I'll probably still sell 650, 675. But is that 675 what's going to come back on paper and what I'm going to see on my appraisal? Probably not, right?
Probably not.
Because especially when we're increasing so fast, they never get a chance to really catch up to themselves. Right? Stable markets, you see your comps, you know where they are 3 months ago, 5 months ago, it makes sense. Now we're seeing a month ago, it was sold for 20,000 below or 30,000 below sometimes.
Well, and you brought up a good point. I mean, part of that is that the appraiser's using comparables from, 3 months ago. So, as a spring market starts to happen, hello, everyone, those comparables are from, January, February, maybe March if you're lucky. That they've already been disclosed and everything like that. But when things start to really happen and they're hot in April, you're still dealing with, those comps that are, a little while ago and maybe not as strong a market. Or if you're purchasing a home right now, that could be comparables from, December, November, when the market was very stagnant. So I always tell people your best time to really purchase is in June because those spring comps have caught up. And that's when you're going to get your most bang for your buck on your appraisal.
Right. Absolutely. So understand the two values, work them both, make sure they make sense for you. So we got a question from Daniel. He's asked, it sometimes seems like there's more deals than capital. Daniel, that is an amazing problem to have, especially in today's market. What do you recommend to get a push in terms of properties you're able to finance, especially considering the raising rates? What do you recommend to get a push in terms of properties? Daniel, could you help me out a little bit more and just tell me what you mean by as far as the push in terms of properties? Are you asking like how to source the properties? Are you asking me what's the best properties to be pushing? I'm not sure. So you're saying that you're coming across a situation where you have more deals than capital. So now you're trying to find ways to get other forms of financing, like the gap financing, I'm assuming. So what we've noticed right now, all right, so he's saying that down payments went up 30% as opposed to where they used to be at 10 or 20% thanks to COVID. So how could he go about and recapturing those funds or finding those funds to put towards his deals? I mean, that's really a creative thing, right? So everyone's in a little bit of a different situation. You may have a primary home. You could tap into those funds, which would be my ideal situation because I'm going to get the best rates that way, probably line of credit as well. So I'm not paying for it when I'm not using it. That would probably be number one. Number two, friends and family. Number three, you could go to your bank for a private loan if you have good credit. Number four, you can go to another real estate investor who might not have a deal to put into right now. Our gap funders that we used to talk to right now, I don't think any of them are lending at the moment, but those would be four good ways of, finding that extra money to put towards your down payment and get your deal done.
That was easy for me.
What was easy for you? The question?
Yes.
Worked so hard on it. Guys, any other questions? We'd love to hear from you. Let us know what you're thinking about, maybe some of your experiences that you've noticed this year. Or did we just do a really good job telling everybody what's going on?
Don't we always, Max?
We always do the best job.
We have this down. I should write up some more questions, stimulate what we're talking about.
Speaking of stimulus, that's a big one. We had a lot more money printed. Do you think
it's not gonna, the amount of money that the stimulus is not gonna help somebody with a down payment on a house, especially.
No, I wasn't talking about that.
Is it gonna,
so much money. Like, is that, do you think, affecting how prices have gone up? Like there's more dollars available?
I don't think it's having an effect on it. I really think it's just a supply and demand situation right now. When, there's low supply, it's like you just stated. You're talking to all kinds of agents, and what are the agents telling you? My problem is getting the bid. And so what happens when you're in a bidding war? Everybody's going to go over immediately, right? They're going to want to get it. They're 5,000, 10,000, 20,000, it depends on how bad somebody wants something. When we have the other situation go and we have, an oversupply, everybody's like, whatever, I can get that house. I can go back to it in 2 weeks and offer them, less. They're going to be fine with it. So yeah, the stimulus money really isn't helping, not in the housing.
Right.
Definitely it's affecting those who need to make rent. So maybe in the rental market, although I'm still hearing a lot from people who have tons of rentals, they're just like, oh my gosh, like nobody's making their rent yet. So
I'm hearing a lot of mixture. Either they're doing really well and they've figured out how to communicate with them and work it out, or they are not collecting rents. I'm kind of hearing a little bit of both. Some people, I guess, just got luckier than others. It's just how it is. And also certain markets, right? Some markets that have, like Miami right now, they've not really closed down at all throughout this entire process. Most people, unless you're working hospitality, like in a hotel or something of that nature, you, for the most part, kept your job, right?
Yeah.
So they aren't seeing that as
Florida
much.
In a whole, not just that's what I'm hearing anyways, is not just Miami, the way it was handled and everything.
The whole Florida is not just Miami?
To you it is. Isn't that funny how you do that in certain states? You're like, oh, you mean New Orleans isn't Louisiana?
Miami and Disney World, that's Florida.
That's so funny. I can just see you down in Miami, Max. Good thing you're not going to Pitbull.
Guys, any other questions before we let you guys go for the evening? We definitely appreciate it. By the way, Nicole, this was awesome. You are always super informative. You're always very helpful, bubbly, and fun also while you're doing it. So thank you so much for giving us a little update where things are moving. I'm sure everyone here got a lot of nuggets that they're going to use when they start to find their next deal. And so if anyone needs any help, whether it be financing or just want to talk through a deal, feel free to reach out to us at Express Capital Financing. You can reach us at 718-285-0806. Again, that's 718-285-0806. And I'll put that in the chat box for you guys. And if anyone has any questions as well for Nicole, most of the time she's going to pass you through to us. So we'll make sure to kind of get you the responses you need. If there's anything, trying to think if there's anything else that we're missing before we let them go.
You can reach me at Nicole@fastapp.com if you have a question for me directly.
Thank you.
And as always, it's a great doing this with you, Max.
Thank you.